Good morning. Today is Sunday, and I am making a video about stock option contracts expiring on the 28th of July. So if you're tuning in, hopefully you're able to do this on your free time, either Sunday, the 23rd, or the 24th, and follow along. I think the oil markets are an interesting place to be for various reasons. They're easier than other stocks to follow. I think there's a strong correlation between news at OPEC, the oil providing or the oil producing countries of the world, and the news will directly impact the stocks and prices. At a high level, oil has a number of corporate components. So a company might be skilled at mining, another company will refine it and distribute it. I believe MRO and MPC are those American brands that people are familiar with. They do both refinement onshore and distribution. I'm looking at MRO, who trades on average between $25 and $30 per year. Lately, oil has been on the decline, which is why I'm paying attention to it. I made about a 500% gain, that is to say, a $100 investment turned into five at the beginning of April after some news in OPEC that coincided with my interest in following it as it had approached 52-week lows. The context is, like other people that were following MRO and oil, there was some downward pressure on the stock. It was among the worst performing stocks in terms of markets, comparative speaking, the worst of them all. And we knew that something was going to turn around. So when it's approaching the $52 mark, I made a video indicating I think things are going to turn around. Um, and I actually didn't make a video then. I invested a little bit of money, and I noticed that the news came out a few days after it had reached that point of lowness, where OPEC said, "Look, we can't afford to continue to have this lag because we just have too much money invested in our economy that depends on the oil prices. So we're going to cut supply." And as you know from your economics training days, you cut supply, the prices of that commodity have to go up um, as long as the demand stays the same. Um, the demand generally is pretty static, I think, in oil consumption. You have to use it. So it's pretty much understood that there's a direct correlation between supply cuts and price. In this case, the price was expected to go up. So the demand for that stock went up. When the demand for that stock went up, the price of that stock went up. And like I said, the value of my option contract, even though the stock had only moved by a couple of bucks, went up by 500%. And that's what turned me on to starting to maybe publish these results as I continue to develop as a financial analyst and perhaps start my own practice. This video will give me a good solid footing and perhaps help me launch my platform and my business. So thanks for your patience. Again, I'm Ed. I've been trading for about 5 years. I have leveraged some of my savings to invest in an education, including an education with Prosper Trading Academy, which advertises on YouTube. I first learned about Prosper Trading Academy through an advertisement from Charles Moon. It was a stocks and bonds trader focused on small caps. He's son of immigrants in Chicago, then went on to become a success and caught the attention of Scott Bauer, Goldman Sachs exec that retired to start his own educational platform. Scott Bauer is a great trader, great businessman, and he hired a few people to help him develop an online portal to train. And so I met Scott and Mike Shore, who's head of education there. I've learned all sorts of things from their education platform, and to boot, if you pay for membership, you can spend some time with them on a daily basis. I've enjoyed that thoroughly. Um, and I'm a competitive person, so I like to put out my own ideas and develop my own intelligence on it. But Prosper Trading Academy was a great place to start. Thank you, Scott, Charlie, and Mike. So without further ado, let's look at MRO. So let's have a look at a options chart for MRO from last month. This will show you and give you a brief taste of what we're talking about, which is how much more the price of a stock option contract can go up than the price of the stock itself. So let's look at this chart in greater detail. On the left, we saw MRO June 23rd expiration. That's right here where I'm checking. At that time, the call that's in the money is the most bottom one in yellow. That means the stock was trading right around this price right here. Okay. Um, 2 days later, you'll notice the stock price has gone up. And we'll notice what is the stock uh, option contract trading at. Initially, if we had bought it, it would have cost 111. 2 days later, that price is at 181. So we noticed that the $22 strike uh, was in play and made us about 80% in 2 days. So we're looking at, again, the MRO options chain as it appeared at the beginning of June when I started following this and making recordings of it. Another example here is the $23 contract trading on the day of this video at $1.57. 2 days earlier, as you can see, 17 days to expiration versus 15. The $23 strike is trading at 90. So it went from 94 to 157. Again, it's about a $60 or 65% increase in the price of the option, and the stock itself has gone up only about $1. In this chart, we are looking at the price and the candlesticks, which are the ranges of the price of a stock on any given day. We're looking at the daily calendar, the daily 1 year look, I've highlighted the period of time from November of last year to today. Today it's trading about 25.50. Uh, you'll notice there was a precipitous move in the stock from, I would say, the third week in June to today. It's gone up considerably. And I just wanted to go over the basics of how I followed the stock and when I went into my trades using this information. At the top, you've got the chart, the candlesticks. I've got a orange line which symbolizes the 180-day moving average, the blue line which symbolizes the 90-day moving average, and the other line symbolizing the 45-day moving average. The stock has started trading above its moving averages and approaching its long-term uh, trading moving average. Most traders would suggest that if they're if they're trying to make gains or are bullish on it, they want to wait until it's over the long-term moving average because that indicates a longer trend. We are at the beginning of a period of time when this could happen, so it's coinciding with this video, and I hope it really highlights the importance of those. But you'll notice when a stock starts starts to go over these moving averages after it's been in a decline for a while, overall the picture is getting better for the stock. Down here, we're looking at what's called the momentum indicator. The momentum indicator is suggesting, for example, here in February, whether there are more buyers or sellers in the market. When it's down to close to the bottom of the area of that chart, there are more sellers than buyers. Conversely, when it's at the top, there are more buyers than sellers. Again, bottom, top. So if you look at where the stock is, bottom, more sellers, more buyers. Okay, so we're looking at that period of time in February. That's where we expect the stock to get to over time. I'm thinking it could get there sooner than later. Again, here the momentum indicator is towards the high end, and you can see it had been bought for a while. And then here on the low end, and you can see it was selling for a while. So if you take the average, it's basically where we are. So these charts are important to pay attention to. Let's move on to the next one. All right, guys. So here we're gonna just conclude by going over what we've discussed. And if we look at the chart of the corresponding dates, you'll be able to see things with some perspective. So again, back in June, the price of the stock was in the 24.50 range, and the options for the 24.50 contract were about $50. And then for the June 30th expiration, the same option contract was worth about 75. So what we're looking at this week is the price of an option as it goes up on a daily basis, approaching the next expiration date. I do have an open position, and we're going to discuss that a little bit more. Again, the goal of this conversation was to get you interested in making money trading options, and then we're going to do a live example. Thank you so much.